Dave Nielsen, CEO for the Home Builders Association of Metro Portland, here with Tim Breedlove, COO for Renaissance Homes and a past president of the HBA. Welcome, Tim.
Thanks, Dave.
So we're here to talk about the National Association of Home Builders recently did a construction forecast webinar, and they had several people that presented on that. Tim participated in that, and in fact has been on many of these over the course of the last few years. So Tim, we just want to talk a little bit about that forecast. Maybe you can first off just start off by saying who was on it, who are the people that were prognosticating about how things have been and where we're going.
Okay, Dave. Well, the seminar or webinar has been run by David Crowe, who's the senior economist for the NAHB, and he was joined on this webinar by the chief economist for UBS.
Great. So we had some certified smart people that were on this. That's probably what you can take away from this. And they all gave some different perspectives. And what we want to do is talk a little bit about what they were projecting nationally, what are some impacts to how housing will be impacted over the next few years, and then bring that down to the local market. So the first thing that really hasn't gotten a lot of attention, I don't think, has been household formations. And what impact that has had over the underbuild or the poor housing market that we've had the last 4 or 5 years, and how that might be impacting things going forward. So you want to talk a little bit about housing formations. We've got a few slides we're going to show up here you can refer to, Tim.
Sure. Yeah, the first, I think, important factor there is to look at the demographics, and these are, again, national statistics, the demographics of the overall population. And we all know that we're sort of at the leading edge of the baby boom, which was a generation born from 1948 to 1964. After that was followed by a little bit of a decline in the Gen X group. And so what we're seeing coming up into the peak traditional household ownership years is actually a growth. We expect that there will be a period of growth over the next 5 to 10 years. One of the factors that we're not clear on yet is just the non-traditional dynamics of this recent economy with additional school debt, obviously high unemployment, how long, and the lack of household formations, whether or not that impact will be delayed. But I think it bodes well, at least looking at the period we're leaving has fewer people in it than the people we're coming up approaching.
And then looking at the second slide, we can also see in terms of what was the peak in terms of household formations and what was the trough, and then where we're at now, which also shows, you know, a big difference between where we were at the peak and where we were at during the housing recession from about 2008 through 2010-11.
Right. Well, in the first part of this century, household formations averaged about 1.4 million households each year, and in the trough we got down to only about 500,000, and now we've started back up. I think that the most recent run rate for the last 2 years has been about 860,000. So we're clearly not back to the peak, but we've definitely come off the trough.
And another way maybe to help people visualize this is this third slide, where you can see what the household formation rate is, and then what the population projection was, population growth. And you can see from about 2004 to 2006-07, we were actually overbuilding for the household formations. But then we've had this significant under dip here for the last 4 or 5 years. So again, that's another way of just visualizing and being able to see we've got a lot of households that are going to be formed over the next few years, college kids that continue to live with their parents, multi-generational households living together. I know there was an increase by several 100,000 over the last few years in terms of families living together and as opposed to forming their own households. That's coming through. That's going to have a huge impact on the future of housing over the next few years.
Was that a question or a statement?
We'll move on to the next slide and we'll go from there. So we've talked about household formations. Let's talk about a few other things that are having an impact on the housing market right now. And the first of those is something this next slide shows us, kind of a price to income ratio. You want to kind of explain what this means and help us understand how this has had an impact on the housing market?
Certainly. Well, I think one of the things that drives housing and certainly ownership has been affordability. And we have statistics that show on a long-term basis, house prices have traditionally been about 3.2 times household income. And as the market heated up in the early part of this century, and it really overheated and got up well over four times. And so as prices escalated and those came crashing back down and actually went below the long-term trend line, and over the last year or so we've actually got back up to that trend line, and I think right now we're actually maybe even with the supply shortage actually in a little bit of a heated market where prices are actually pushing up through that long-term trend line. But I think all in all, I think we're in a much better position than we've been for several years.
Yeah, so the affordability is back. So what about foreclosures, delinquencies? Those are something that really weighed on the market during the housing depression. And they kept prices, they kept traditional single-family house prices, kind of undervalued those. We had appraisal issues and all of that. What are we seeing now in terms of delinquencies and foreclosures in the market? This next slide kind of shows a little bit. It certainly looks good. So what can you tell us about this and what the significance of this is?
Well, as we entered this downturn in 2007, 2008, as people began losing jobs, as housing prices began to rapidly decline, and people got forced into delinquencies and foreclosures, obviously those rates escalated significantly. And as we've moved forward, if you look over the last couple of years, that inventory has been being absorbed in part by the investors we just discussed, but also new entrants back into the housing purchase market. So I think we're still above long-term trends, but that inventory of both delinquencies and available foreclosures has gone down significantly.
And the last factor, obviously a big one, we'll say the biggest for last, I guess, is employment. People are generally feeling better about the economy, and there's certainly GDP is growing, and so we're seeing that. But how's that a factor, and where is Oregon? Everyone's kind of talked about Oregon lagging behind in terms of we had one of the highest unemployment rates during the recession. So what did the economists project in terms of Oregon, or where are we falling right now in terms of employment?
Actually, Oregon's been lagging a little bit. It was even at the trough, and certainly now as we're recovering, we're showing signs of recovery, but we're still below 100%. The average is at 100%. Oregon's in the 95, 96% of the national average in both those statistics.
So let's talk a little bit now about where we're at. First off, remodeling. What does remodeling look like? This next slide kind of shows us a little bit in terms of remodeling activity over the last several years and where it's at now, and maybe even where it's trending the end of this year.
Yeah, well, remodeling, just like new construction, had a huge boom in the 2004, 2005, 2006 era. It had a decline, just like new starts, but the decline wasn't as deep, and it's actually been on a recovery for the last couple of years, and we're now at where remodeling is at, probably about 2002, 2003 levels.
Which is good. Probably what hurt remodeling as much as the decline was the fact that so many people were getting into remodeling. In fact, the comment I heard from a lot of our remodelers is if we could just get builders back to building, there'd be a lot more work for us. And so let's get to that in the next slide, which is talking about single-family construction. Our builders getting back to building, this slide certainly shows that we're increasing, but what can we read from this slide in terms of what the activity is now and how that compares to where we were at a few years ago?
Yeah, well, I think the long-term trend line, I think we anticipate with population growth, with household formations, that there will be an upward trend in housing starts. If you look back at the early part of the century, we had a run rate averaging around 1.3 million starts is kind of considered normal in this era. When the decline happened, we got down to as low as 27% of that. We got down to about 300,000 starts, or almost a million less. And one of the things that wasn't covered in this year's webinar, or this edition of the webinar, but I'd heard in a previous one that was actually an interesting note to me, was that actually we need to replace probably 200,000 to 300,000 housing units each year just due to loss, damage, fire, deterioration, depreciation, just outmoded or being obsolete. Mm-hmm. And so if you use that number, then that was saying that actual new starts were almost minimal.
Okay. And then this next slide we're going to get to talks about where just this tri-county region. So Metro Portland, not counting Clark County, there are friends over the river, but let's just talk about Washington, Multnomah, and Clackamas County. Where's remodeling activity up for the first quarter of 2013 versus where it was in the first quarter of 2012, and then single family starts?
Remodeling's up about 6% year over year, which is fairly consistent with the national statistics we just saw.
Mm-hmm. And then what about single family construction?
Single family is actually up 31% year over year, so very robust.
That's great. So we're heading in the right direction. Now we're going to talk a little bit about what are a couple of things that, as the economy is heating up and as housing is starting to come back, are affecting builders' ability to build. So let's talk about labor and where. as builders are building more, we obviously had a lot of companies that went out of business. We had a lot of subcontractors that laid a lot of people off. Where are they at in terms of being able to handle the capacity of some of this increased construction? Even though we're still way below where a normal market is, we're obviously growing. So where are builders at in that, and what are maybe some of the more difficult areas that you're seeing in terms of labor shortages?
Well, according to the presentation by the NAHB, they'd surveyed builders all around the country, and they found that in many cases there was severe labor shortages across just about all trade categories, but the most significant ones were in framers and finished carpenters, because those are relatively skilled trades, and as you pointed out, as people left the industry to go find employment elsewhere, as we're ramping back up now, those companies are being challenged to provide those laborers.
So labor is obviously a significant cost that goes into the construction of homes. Another is obviously the price of the materials themselves. So what are we seeing in there? Where are things? Prices obviously came down even on materials during the trough. They're starting to come back up. Where are you seeing things? And what are the areas? I've heard from a lot of builders that there are a few items that are in particularly rising dramatically higher than what maybe the growth in housing has been. What can you talk about this? This next slide talks a little bit about that.
Right, and this slide's very detailed, but it actually outlines a number of key materials. A lot of those on a commodity basis, prices are set nationally or driven really by national markets, not necessarily local suppliers. They're really the recipient of those price increases, and I think you can see that prices on many commodities, even though production or starts is only at about 47% of the peak, material costs are already up to 94 to 100%. So the suppliers have actually already recovered almost all of their peak pricing, whereas starts have a long ways to run, which I guess would suggest that prices will actually exceed past levels as we go forward with additional production.
Okay, so let's talk about house price trend improving. And this next slide was, again, a national slide. We can certainly see the huge mountain that we were at and the peak that we got to in 06 and 07, and then the steady, fairly rapid decline over the last few years. But then right at the end here, we're seeing some encouraging after a period of flatness. And I remember talking with a lot of builders in 2010 and 2011, where are we at? And everyone said, well, we're kind of bumping along. Well, this slide shows we're bumping along. So now where are we at? What good news do we see from this slide?
Exactly. Well, I think a year ago, we were at about a 1% price decline. So that really gets to your bumping along. Over the last 12 months, however, we've actually seen a national increase of about 6.5%.
And I've heard statistics locally, and again, everything is local. We always say real estate is local. But I believe there have been some markets that have been higher than that. What is, just from your business in Renaissance, what are you seeing? Are you seeing some markets where actually those are going even higher?
I think I've seen recent market statistics that suggest an average of almost 8% in the Portland market, and certainly there are some sub-markets that are higher than that, some that are less, but I think that 6.5% to 7% range is actually, that we've seen nationally, is pretty consistent with the Portland market.
Okay. So then the last couple of slides we're going to show really going to talk about where are we headed the next couple of years. We talked about this boom, and we don't want to compare the building activity to where we are at the boom. We want to compare it to something more normal. So what do the economists say? What time period should we be looking at in terms of what's a normal period for housing starts that we should compare ourselves to?
Well, interestingly, like you pointed out at the beginning, I've been attending this seminar, or these webinars for several years, and the outlying forecast that seemed to be 2 years out was always around 850,000, and I think that's the same forecast for 2014. So I think the NAHB is really projecting that number, and I think this year, however, there's actually some substance behind that because we've actually seen growth over the last 2 years. The NAHB and the UBS gentlemen didn't project how long it would take to get back to 1.3 million, although it was interesting. The UBS economist, his forecast was significantly higher than the NAHB. I believe he was actually forecasting about 1.1 million for 2014.
And to be clear, we talk about things, that's hard numbers. When we talk about percent, I think we said that by the end of this year, they're projected to be about 40% of normal. And again, normal is not 2006, 2007 levels. What are they comparing that to in terms of, you mentioned a hard number, but about what time period, so that people can say, oh, I remember what we were building at that time period. When was that compared to?
I think right now, just like we just said with prices and some of the other statistics, that sort of that 02 to 04 range that's about where we were at the 1.3 million mark. By the end of this year, projecting to be about 47% of that. By the end of next year, up to about 71% of that peak.
Now that's nationally. I think this last slide we're going to look at talks a little about where Oregon's at, and rather than kind of a confusing bar graph, this is kind of a nice one. It shows a country everyone can find where Oregon is pretty easily. what does this tell us about where Oregon's going to be?
That assumes you live in Oregon. You
That's
can find
right.
it. But yeah, well, I think the yellow coding actually says that state is going to be at about between 40 and 60% of where it was in the peak. And I think we just pointed out we're ending this year at 47. We're going to be up to 71 by the end of 14. So Oregon's right in that range. We're sort of, and that speaks to some of the other slides where we're really kind of in that median range.
Great. Well, I want to thank you for attending the webinar and sharing with us. We hope that this has been helpful for those who've been watching here in the local market who couldn't attend the webinar. We plan on doing this occasionally as NAHB presents information, as we get local information to help keep our members in the industry up to date on what's going on with the construction industry. Tim, thanks for your time.
Great. Does that mean I get a free lunch next time?
Absolutely.
All right.
I'll give you I got a coupon somewhere. I'll have to find it.